First of all, your thoughts on the market's move this week. Like I mentioned, it seems to be lacking conviction. How do you see things playing out?
Yeah, I think it's quite normal given the period which we are in. A lot of factors which we can look at. Normally, towards this time of the year, you see a lot of investors taking profits, locking in profits which have been made during the year in order to provide their funding for year-end needs. Also, I still believe fund managers also are locking in profits and trying to record a good profit for the year. So I think that might be some of the reasons which could be the reason for the kind of slowdown which we've noticed in the market. In the last 4 weeks, the index has shed 400 basis points or more than that. So I think that's part of the reason. Also, the lack of further news which had been driving the market up to this time, news on AMCON and all that has there's been a bit of a slowdown in that, and
right.
That would have definitely impacted.
Okay, let's focus on the sector that you cover, insurance. The worst performing sector in 2010, obviously. I think this is the second year that it's really been the worst performing sector. So it's amazing what we've seen. Do you think the rating of the sector as a whole is justified, or do you think that the investors' caution there's actually that need for caution going, more or less justifying the moves we've seen this year?
Well, I think what you're seeing in the insurance space is much more a reflection of the 2009 figures, which were just released recently too. Before now, what has happened is that investors have not had the opportunity to see these insurance figures. They weren't coming out with clear results as at when due, and it was not until when some of these companies, around 12 of them, were placed on technical suspension by the NSC that they actually came out with their results, and this just wasn't good enough. A lot of issues.
It's really a level of disclosure issue, really.
Yes, I just still think that's
okay. And then what's the outlook, though? Do you think this is time to start picking those stocks, or do you think we should still be cautious going into 2011?
I think 2011 should be better for the insurers, really. A lot of the performance this year has been based on 2009 figures, as I said. And for those we have seen their results so far this year, we've seen a rebound in their top line and bottom line figures. Gross premium has been growing significantly, even though PAT might have been a bit of a slowdown, and that's just because of a lot of charges which they have to take, a loss in the investment income, as well as a provision for bad debts due to NICOM or recent regulation. But I still think it's just going to be better than last year. We're not going to see the negative figures which characterized a lot of those companies in that sector.
So what I hear you say, you're cautiously bullish. So in that, given that background, which stocks are looking interesting for you in 2011? Which stocks should investors start picking?
I think it's important to look at the drivers for the insurance industry. So to say, a lot of these companies that have been coming out with impressive figures this quarters this year has just been based on much more premium coming from oil and gas business. So we still think for those who have a strong business profile, for those who are able to grow their books, grow their business, especially in that area, not just oil and gas business, but also retail business, those companies we believe will just continue to record good performance, strong performance. For those who we have seen their results so far this year, it has been good. We also expect more to come out. I just don't think it's going to be like our last year. And as I said, what we'll be looking out for, we'll be looking at a strong brand. We'll look at product distribution. We'll look at those companies that actually have a good interface with their clients.
Please be specific on us.
Yeah,
which stocks are interesting?
Custodian definitely is still attractive.
You think they're still?
Yes, it's trading at a P of 7 times, and that's just more like the sector average. So we still think that stock will hold value. Also, the likes of AICO, Lasaco, a lot of these companies, we just know that it's just going to be a better year for them going to 2011.
And any of those 50 couple stocks you think is attractive, or are you cautious there?
Cautious, really, because a lot of other factors come into play. The liquidity problem, the volume, availability of these also. We just still think there might be a bit of caution until we start seeing their figures.
Right, so caution is the word. We'll wait and see how it plays out.